I often get asked by business owners, what numbers should I be tracking in my business? There's a lot of numbers that we should be tracking, but we should ultimately be focusing and prioritizing on the ones that are going to move the needle most depending on your goals. I'm going to give you a bit of a crash course on the primary numbers in your business and how to identify the numbers that are going to drive the outcomes that you truly want. Now, when we talk about numbers in a business, I like to break these down into 4 primary segments. We have got our lead indicators, we've got our profit and loss, we've got our balance sheet, and we've got our cash flow. And ultimately, these 4 quadrants are going to drive the vast majority of our performance in business, and we should be able to trace back all of our results to each of these 4 quadrants. I'm going to cover them off one by one. So our lead indicators are basically any of the activity that results in top-line revenue. For most businesses, we're talking about the number of lead opportunities they're getting. So basically name, email address, phone number, inquiries, the number of sales interactions that are occurring, whether you call that a discovery meeting or a game plan or whatever, the number of offers that are made, and the number of sales that are made. As a result of all of this information, we can then discern your conversion rate, your average cash conversion cycle from lead to close, the average deal value, and basically understanding the number of leads and opportunities that you need. We have a tool called the KPI forecasting tool. I just went through one with one of my clients who said, Jackson, currently doing about 70 grand a month. I'd like to increase that to 90,000 a month. I'm not exactly sure what I should do to bridge that gap. We plugged in all of his details. We worked out what his average sale value was. We put in his current KPIs for the last couple of months, and we're able to work out, okay, well, this is the reason why you're producing 70,000 a month. If you increase your leads by this, you would get to that particular goal. If you increase your conversion rate by this, you'd get to the goal. If you increase your average sale value, you'd get to the goal, or a combination of all of the above. We came up with a plan and we implemented it, and he's got complete confidence of exactly what is required to get to that goal in the next 30 days. Next is your profit and loss. This is where most people get lost. And the issue that we run into here, guys, is that most people's profit and loss is far too complicated or convoluted for them to really understand what is going on in their business. I like to simplify a profit and loss down into a couple of key parts. We've got top line revenue, the revenue you produce for your business. We've got cost of sales, which is basically any variable expense, primarily subcontractors and materials associated with producing and delivering your product or service. That leaves us with our gross profit. Revenue minus cost of sales equals gross profit. We then get into our operating expenses, and I segment that into wages and salaries. How much are you spending on your team and yourself? We've got marketing. What are you spending on advertising to acquire customers? And then we've got other operating expenses, basically everything else. So then we take all of our operating expenses, deduct that from our gross profit, and that gives us our operating profit. And this is basically all we really need to know about our P&L. It doesn't matter how many different tracking categories you've got. If we can understand the relationship between revenue to gross profit, to our operating expenses, to operating profit, we're in a really good position to understand how do we influence the results. Now, by understanding this allows us to understand your financial model, because largely your financial model of firstly, what is your direct cost to serve? What are your operating expenses and how has that been changing over time, depending as your business grows? And ultimately, what is our profit target that we're trying to achieve? We can reverse engineer this to work out what exactly we've got to do to achieve our goals. So in my business, I aim to do a 30% operating profit. And I understand that my cost of sales is typically 20%. My operating expenses is typically 50%, which leaves me with 30% operating profit. If for whatever reason I have volatility in terms of my revenue, I need to adjust my operating expenses because my cost of sales is largely going to be dictated by that revenue produced, and make adjustments accordingly in order to ensure that I stay on track for my plan. Most business owners just take a leap of faith. They don't look at their P&L often, and they definitely don't use their P&L in order to optimize their financial model, basically setting a profit target and then reverse engineering that into the income and expense required to be able to get there. I did this recently with another client who runs a solar business. They wanted to basically pay off their overdraft and their credit card over the course of the next 12 months. We're able to reverse engineer their value proposition based on their cost of sales, their operating expenses, and their revenue goals, and basically implement a plan that's going to allow them to produce over $650,000 in profit over the next 12 months. Pretty cool. Next, we've got the balance sheet, which most business owners don't look at all. And to simplify the balance sheet, we've got our cash. The reality is that our cash is king, right? Our P&L is accrual. So just because you've sent an invoice doesn't mean you've been paid on it. So I like to track our cash, and I like to segment that down into various bank accounts: revenue account, cost of sales account, OPEX account, owner's pay account, tax account, and a profit account. And what this allows me to do is to see each and every single day, based on the money that's in each of those accounts, exactly how we're doing financially. And this gives us a lot of clarity around our true financial position. Next is our current assets, which is typically our accounts receivable. It's basically outstanding invoices that our clients haven't paid yet. And as a general rule of thumb, we don't want that accounts receivable to exceed 15% of your current assets. So for example, if you've got $100,000 in the bank, our accounts receivable shouldn't exceed $15,000. And if it does, we need to be mindful of our cash collection cycle. I'll record another video about how do we go through that. Once we understand this, and we've got a process for getting accounts receivable into cash at bank, the next thing we need to consider is our current liabilities. What are our accrued PAYG, GST, and our supplier liabilities? And we need to ensure that we've got enough cash flow in order to meet those liabilities as they come up. And then we want to understand long-term assets and liabilities so we can make sure that we've got a really good balance sheet and we're maximizing the equity of that business. And then lastly, we want to understand cash flow. And we can produce a cash flow statement, but that's largely going to be dependent on the quality of your bookkeeping and your accounting. The simplest kind of cash flow statement that you can ever produce is having that segmentation of the bank accounts. I personally have a report that I receive every single day from my dashboard that tells me how much money I've got in each of my bank accounts across all of my businesses. And this just influences my transparency around that particular business. That influences how I brief my team of what they should be focusing on, and that allows me to focus my attention accordingly so there's never any surprises. So these are a whole set of numbers across those 4 quadrants of your lead indicators, your P&L, your balance sheet, and your cash flow that will largely influence where you should be focusing your attention. If you're struggling with top line revenue, focus on the lead indicators. Optimize your OPEX in terms of your profit and loss. If you're struggling with cash flow, understand your balance sheet. Focus on that bank balance accounting through segmenting those accounts so you can understand where the issues are. This allows you to then focus your time and attention in the right place and in the right quadrant in order to get the financial outcome that you want. This is a really, really simple framework. Once you implement it and you start to understand it, you're going to have far more confidence around your financial management. This is what we do for our clients all day, every day. So if you're a 6 or 7-figure business owner and you need this kind of financial structure to give you clarity around the future, feel free to reach out to me. Jump in the link in my bio. Love to have a conversation. Hope this has been helpful.